Hi everyone, and welcome to this afternoon's webinar. It's great to have you join myself and David, my husband, who is sitting at the back of me. But before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And just for the benefit of those of you who perhaps are coming along for the first time, what we're going to do in this session is obviously going to look at the markets, primarily the US markets in terms of the indices, although I think David's got the oil chart up and possibly gold and silver, but he's got some commodities and indices, and I've got some forex charts. But the charts that we put up, essentially what we look at the price action on these charts with volume, because the methodology that David and I have been using for the last 20 odd years ago, we call volume price analysis. And it really is the relationship between, as I said, the price action and the volume being the participation, the activity. And what that does, it actually confirms whether the movement that you are seeing on the chart, either up or down, is valid. Is it genuine, or is it is it being manipulated? Is it a fake move? And and we all know why these moves happen in the markets, and that's basically to trick us and to take our money from us. But if you do understand the principles of volume price analysis, which is price action volume, but it's also candles, candle patterns, and very importantly, support and resistance. However you measure your support and resistance, we use two specialist indicators for that, but you may have other ways of denoting important support and resistance lines on your charts. You include those as well. And to finish off, the fifth element of volume price analysis is time, and we're going to look at time in multiple time frames. Now, what I've also done on Amazon is that the volume price analysis book, which is the previous book in the previous slide, now has a companion and basically has a book which has over 200 worked examples of the methodology in all sorts of in all time frames. And this particular one is dedicated to primarily stocks, indices, and some commodities. There is a version for forex as well. And you say, well, 200 worked examples, they obviously, the charts are whenever the book was done. Now it's almost coming up to a couple of years. Are they still going to be valid? And yes, they are, because once you recognize VPA signals, once you recognize the structure of the chart according to the principles of volume price analysis, they repeat endlessly. It's like Groundhog Day. They come round and round and round, as I said, in all time frames. So once you become familiar with them, you will then spot them and say, haha, and now I have a pretty good idea of what is going to happen next. And that's really all we want to know as traders. Right, what's happening generally, just really very quickly, the fundamental news has all now gone through in terms of, for this particular set, for the US sessions we see here. The most important obviously has been the unemployment claims, which have come in very slightly below the shocking number that was up there anyway, 1.4 million. They've only come in at only 1.1 million, which is great, which is good news. But as you can see here, the devastating effect that the virus has had on the labour market in the US. You can see, I mean, this is obviously running up to the start of the pandemic, and whoosh, I mean, we've had over 6 million and beyond. Now, there is more news to do with the support that the US government has put in place, or is attempting to put in place, another tranche of I think money payments for to top up, I think, the standard unemployment, but that hasn't gone through Congress at the moment, and there's all sorts of horse trading going on Capitol Hill, and it's partly the reason why the market is just so flat in terms of the futures. We can see here, this is the futures for the Dow Jones. I mean, it's up 70. It's gone past a critical level, which was 27,000. The S&P, that's up. They're all in nosebleed levels at the moment. But it is all you can say, they're flat, and the Nasdaq is as well. That's over the, those of you who come along regularly will know 11,000 was the kind of level that I've been saying, look, it's got to go beyond 11,000 to carry on high. It has, it's broken through the 11,000, but look at the little candles there from yesterday, very, very narrow spreads, reasonable amount of volume underneath it. Can that go higher based on that? Well, you know, markets have, you look back over here and you can see very narrow candles with reasonable volume, and it, you know, up the Nasdaq goes. So at the moment, it's waiting for this this news. It was supposed to have sorted out last Friday, and it hasn't. So August markets generally very quiet, certainly coming into the middle of August. I don't think we're going to be very quiet. I think we're going to have an exception this year, basically, of what is, you know, all the things that are going on in the world at the moment. So we have to take each day as it comes, look at the charts, look at the daily charts, set ourselves up, and, you know, expect the unexpected, as it were, because generally speaking, that is what's likely to happen. Before I pass over to David very quickly, what I've done here is, in fact, let me just move over to David first, because I think, have you got the oil chart up, David? Yeah, let me just move over to David and he can have a look at the oil chart, because what I want to do, because the market's sort of quite flat at the moment, what I did earlier this morning, because today's been an important day for the British pound. We had the Bank of England meeting, very 7 o'clock here, London time, to for the interest rate decision, the statement, you know, the usual thing that goes with one of these releases. And what was interesting was, now usually this event, if impacts the if I find it, here we are, usually impacts cable. Cable is the most popular of the pound pairs that are traded. Cable is very heavily traded anyway, but there's lots of lessons around the release of this fundamental news event, as it were. And one of the questions we always get asked is, well, should I trade through the event? Should I sit back and wait for, you know, the moves to complete, and then perhaps try and take what's called a fade trade, because you always get a knee-jerk reaction. And this morning was really interesting because, as I said, normally you do get a big reaction in cable. And I just want to compare and contrast the two charts of cable, but also the pound Aussie. The pound Aussie is obviously a cross pair. And sometimes what happens is, when you have this kind of news event, you do get volatility. I'm not saying you're not going to get volatility in across the pound pairs, but it's more measured, it's more manageable as you know, in terms of looking at the charts and potentially being able to take a trade. And because cable was just, I wouldn't say it was off the charts in terms of volatility, we have volatility candles, it wasn't that so much, it was the whipsawing. And by whipsawing, I mean these huge spikes that we see to the tops and the bottoms of the candles. Now you say, well, are they tradable? Well, this is the 15-minute chart, and I just wanted to compare it with the 15-minute chart of the pound Aussie. This is exactly the same piece of price action. You can read my analysis of it and a fuller explanation of this on my forex page. It's called, if you type in Anna Cooling and type in learn forex trading, this is where you'll find all the charts that go together with this particular analysis of these charts. But you can see the difference here. Yes, we get volatility, and we know it's volatility in the sense that, by volatility here, I mean this piece of price action in this candle was outside the average true range. And we know that because David and I, we developed an indicator that tells us. It's these little purple arrows here, top to bottom, and these are fired in real time. Now, all indicators have a degree of lag in them, but the volatility indicator doesn't. It will fire off as soon as the price action is outside of the ATR for this particular time frame. So we had a very typical reaction. This was 7 o'clock, which was when the event started, as it were, which was the start of the European Open. Pairs in kind of congestion, trying to break away from the volume point of control, strong resistance up here, very strong platform of support, as we can see here, not only from the VPOC itself, but this blue line. When I said earlier about your support and resistance, how you structure your chart in terms of support and resistance, this is price-based support, these blue and red lines. We call the accumulation and distribution indicator, because the more times this level is tested, this line gets thicker and thicker. You also then have support and resistance through the prism of volume. This is the volume point of control. We have these high volume nodes, low volume nodes, and high volume nodes. And then on top of this, I also have our Camarilla indicator, which kind of gives a hierarchy to the levels that we see on the chart. So we had this volatility, which is what we'd expect. Pound was bought. The reasons for the buying in the pound was because basically the Bank of England, A, didn't cut interest rates, secondly, didn't increase the amount of bond buying, and we're kind of a bit upbeat about the UK economy, so the market liked that and off the pound went. The reaction after a volatility candle is the price action retraces to within the spread of that candle, which it duly did. Then we had another volatility candle, but as you can see here, the move higher was reasonably measured, the wicks to the bottom of the candle, reasonable volume underneath it. We had a couple of weak candles here with sort of pullbacks, but this is where your support and resistance comes in, because it got through what's called the fourth level of the Camarilla, and it's the Camarilla protocol. Most people just use 4 levels. We've actually developed the indicator to give us 6. So this 4th level, what often happens, it will go through, but the price action will often retest it, and it retested it, you see here on this occasion. Then it tried to move higher, came back, but it did retest, and then again, and it moved higher again. Reasonable again, volume going higher and higher, a little bit of weakness, a bit of a pullback, but in this pullback, look at the volume under the down candles, and this is where I'm saying price action and volume should be in agreement. Well, they're clearly not, because the volume is falling, and even though you've got weakness up here, there's not enough to sustain that move lower, and so it carried on higher. Now, when you compare that with the price action on as I said, the equivalent chart of this is exactly the same, time as we can see here. Massive move higher on the release of the news, straight back into the spread of the candle. But look at these wicks. This is what we call racking about, whipsawing. You say, well, what on earth are you supposed to do when this happens? Now, this is the 15-minute chart. There are traders who will be attempting to take scalping trades within these candles. This is a big range in this candle. And the question we're asking, well, should I? And our answer to that is, well, it depends on you. When we go over to David, you'll be able to see he uses the seconds chart. If you have a move, although it's volatile, but it doesn't have all this whipsawing about, you just have to look at the chart and see whether it offers enough of an opportunity to be able to snick some pips either to the upside or to the downside. The issue you may have to address is, well, does your broker allow it? Does your broker allow you to scalp? Certainly in forex, some brokers don't allow it. If you have a market making broker, the spreads might widen. So by the time you put your order in, the price has moved, and you've been stopped out. Also, from the kind of person you are, if you are, someone says, do you like video games? If you haven't got a lot of patience, if you like to get in and out quickly, then maybe scalping generally is for you. And then you have to find an instrument and the time frames that you can make work for you, but also you have to make work with the broker that you are using, because when markets are very volatile, you can put your stops in, but stops aren't 100% guaranteed unless you pay for a guaranteed stop, and then that's going to cost you more money. So on paper, it all sounds, oh yeah, well, I'll just do a quick scalp and, you know, away I go. I'm quite happy. I just want to be in for seconds, maybe minutes, and I'm in and out. That's fine. But there are other factors that you have to consider. So that was the difference between pound, Aussie, and cable this morning. What I also did, I then I took it up to where the move actually stopped on pound Aussie. Here we are, because then after the move you think, okay, well, we've had the move higher, and then it hits a resistance. We see here, this is actually the S6. This is on the 15-minute chart, but we also came up to this the top end of the low volume node, and you think, okay, we've got an up candle and then a down candle. Is it actually possibly after this move higher? If you've not got in here, you've decided to, no, it's not for me, I'm going to wait for a reversal. What's interesting, we're also coming up to 12 noon, and at 12:30 the governor of the Bank of England, Andrew Bailey, was due to give a press conference. So it was not a surprise, to see the price action come to a pause ahead of you know, himself coming, you know, for the press conference to come up. So the expectation is that they will probably go into in consolidation and congestion anyway, which is what markets do when there's, you know, big news event. Tomorrow we've got NFP. And this is where your multiple time frames come in. You say, well, okay, well, this is my 15-minute chart. You know, is there another reason why perhaps this price, this pair has actually come to a temporary pause? So we go up to the hourly chart, and what's interesting about the hourly chart is obviously this is the move higher that we saw from the London Open and the BOE. And look, it's run straight into the volume point of control on the hourly chart. Now with the Camarilla, the levels that you are given on the charts up to, but not including the hourly, are refreshed on a 24-hour basis. So once you know, every 24 hours, then once the session rolls over tonight at the beginning of Asia, new levels will be calculated for the next 24 hours. But on the hourly chart up to the day, these levels that we see here are here to stay for the rest of the week. So how interesting that the price action ran straight into the volume point of control and into this level here just below the R1, and also we have this strong resistance here at 183.60, which is all explained in the in the notes that are on the Facebook post. And what else did I have? Yeah, we also looked at the potential reversals that are coming on. We have the indicator, the CSI. Those of you who have the quantum tools will know this is where we break down the currencies into the individual currencies. I've actually taken off here all the currencies. I just have the pound line and the Aussie line. And we can see here, this was on the, what's this one? This is the 5-minute chart. This exactly just after 12 o'clock. The pound was already beginning to turn over. The Aussie wasn't quite ready to sort of roll back up, as it were. They were kind of moving in the same direction. And that is a clue that also tells us that this is possibly, this is going into a congestion. So that's how we left the pair, as I said, just ahead of Andrew Bailey's press conference. And you can read more about it on my Facebook page. And what happened, and my most important thing is, well, what happened next? Well, what happened next was that we did get a reversal, but we will, let's see if I could got it up here. Let's move that up here. No, that's not going to move. I'm just going to move, pass over to David, and then we will come back and we will see, as they say in all the best novels, what did happen next.